Here's why I say you never go broke taking a profit. There's a reason that that quote is what we put on our shirts, is what we preach to all of our traders inside Power Trades University. And it's because I lost big money before. And when I lost big money, it wasn't just like, oh, well, I'll get it back on the next trade. No, 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 no. I bet the farm on one specific trade, and the farm did not produce any fruits or vegetables. So you never go broke taking a profit is a quote that's near and dear to my heart. I remember I was sitting in my condo style apartment out in the suburbs, and I'm like, I'm gonna buy a condo downtown Royal Oak, Michigan, $500,000. I knew this condo cost $500,000. It was in one of the hottest spots, hottest locations in the city. It was gonna be the ultimate bachelor pad. Had a quarter million roughly in my account, and I take this trade. In fact, the trade was, I don't even want to talk about what trade it was on. It was on a tech stock. Let's just say that. It was on a tech stock, and I had a boatload of option contracts. And in my head, I'm like, I'm going to make $500,000 on this trade because I want to pay 500,000 for the condo and I want $250,000 left in my account. I take the trade. I actually go up $100,000. So I'm up $100,000, not in like one day, but like over a couple days or so, I'm up $100,000. In my head, I'm thinking if I'm up $100,000 in a couple days, surely I'm going to be up 500,000 in the next, 2 weeks, 3 weeks, something like that. And I was up 100. I did not take the profit. To be up $100,000 is a lot of money. And even if you put it in perspective of a $250,000 account, to be up $100,000, you're up something like 40%. And so to be up 40% in like a couple days time is an incredible amount of money to be up. Most people don't make 40% a year in their portfolio. They maybe make 6%, 10%, stuff like that in a year. So to be up 40% in a few days, I should have been grateful. I should have been thinking, you know what? Let's take some chips off the table, which we'll talk about the psychology of winning here in a second. But I didn't do that. I literally said these words: what am I going to do with $100,000? And maybe you've been there before. Maybe you've been up $500, $1,000, and you're like, what am I going to do with that? If it's not $10,000, if it's not $20,000, you don't really think it's going to affect your life that much unless you hit a big number. And that typically is the beginning of the demise of your trading. It's because you're not grateful. There's a whole bunch of reasons, which we'll talk about the psychology of it. Back to the story. I'm up $100,000. I literally said, what am I going to do with $100,000? Like, it's not enough to pay cash for this condo. Yes, it's enough to put 20% down. I wasn't even thinking about that. But I was like, in my head, I just wanted zero payments on it, wanted to own it outright. And this was the trade that was going to do it for me. So next thing you know, the trade started to go against me. I'm up 75,000. I'm like, that's okay. We on our way up. Then I'm up $50,000. Then over the next few days, I'm up $25,000. I'm thinking like, I'm still like, wait a minute. At first, I'm like, I want to make 500,000. Second thought I have is I'm like, okay, it's gonna come back, and at least we'll go back to 100,000. Then I'm up 10,000. Now I'm like, just give me the 100,000 back, and I'll close the trade out. I'll walk away. I'll be grateful for the 100,000. I'm like, give me the 100,000. I'll be grateful. Then the stock went negative, or my account went negative, and I'm like, what just happened? I was up 100,000, 75, 50, 25. Now I'm negative. So I go into the mode that I tell people not to go into, which is hope and prayer. I go straight into the two things that do not matter in the stock market. I hope it goes back up. I'm praying to the gods, please just let me get back to break even. I don't even need the $100,000 no more. Just let me get back to break even. And I told you once before, God is neutral on the stock market. God is not like picking who he go bless. Like, yes, you, my child, will make your stock go back up. God, like, look, I ain't got nothing to do with this. Okay. And so you up $100,000, you didn't take it. Now you're down. I'm down like 10, 20, then I'm down 50. And so now I'm just like, just let me get back to break even. I don't even care about making money. And I remember clear as day being paralyzed. People may think like, why don't you just sell? Why don't you just get out? But I remember being paralyzed. I remember thinking like, kind of shaking. Like, if I click the button and sell, what if that's the time that it's going to turn around and go higher? And you start to live your life, or you start to base your trading account on these what ifs. And you keep thinking what if in a positive direction, and you don't think what if in a negative direction. So I'm like, what if I sell it and it goes higher? What if this is the last day that it stops going down? I never stopped to think and say, what if it keeps going down? What if I blow up my entire account? Never wanted to even entertain the negative side. I was only entertaining the positive. Well, what if I sell and it turns around and goes up? What if this is the last day that it's falling? What if this is just an anomaly for this week or next week? And those what ifs kept, you ever heard of the term death by 1,000 cuts? That was me. I just kept getting cut 1,000 times. To be exact, 250,000 times, right? I got cut 250,000 times. So that bad boy just killed my entire account. And I watched it go down to zero. And that's when I went officially broke after making a ton of money riding on my high horse from age 21, about 24, 25. So that was a crazy time for me. I had to move back home, get a full-time job, and rebuild my account from there. So if you listen to this and this has ever happened to you, number one, you can survive this. You can make the money back. It is not the end of the world. I think we put so much weight in our self-being on how much money we got or how much our net worth is. When you really think about it, those aren't the important things that matter in life. Like, your kids don't come to you and love you because of your net worth. They love you because you spend time with them, because you raised them, you poured into them. You're not a valuable member of the church if you can only donate money. Some of the most valuable people in the church donate the most important resource, which is their time. They volunteer in the church. They're passing out Easter baskets. They're, going to the dollar store, getting clothing and putting care packages together for people with the little money that they have. So some of the most valuable people, their value has nothing to do with money, but we put so much value on money. So if you've ever lost a big chunk of money, that was probably the most important lesson that came out of it for me, is that it's not the end of the world. You can survive this. You will survive this. But what's important is you don't want to make this mistake again. All right, let's be clear. You need to learn from this, but it's not the end of the world. So we had a member inside of the university who had a trade going, and he sold the trade. And once he sold the trade, he took a profit, and the trade kept going up. And he posted inside the university, inside of Power Trades University, that like, man, anybody else deal with this? I'm super frustrated. I made some money, but then it kept going up. Why do I feel bad that I got out? And I'm like, that's because this person probably never, ever lived through going broke from never taking a profit. You see, once you have a profit and watch yourself give it back and then watch it go negative, you start changing exactly how you think about profit. Now you're like, I'm good, because some profit is better than no profit. Small wins add up. When you look at your goal, and when I sit down and I do goal setting with our members, our elite members, next level members, one of the things I ask them is, how much money do you want to make? People say, I want to make $50,000 this year. I said, great. Now divide that by 12. How much do you need to make per month? Right? And then it comes down to be like 4,000 and some change. And so when you break it down and you start to say, wow, I really only need to make like $4,000 a month. Well, what happens is halfway through the month, you'll be in a trade that's up $2,000. And when you understand that small wins add up, you start to say, well, wait a minute. he just told me I only need to make $4,000 and some change a month. I'm up $2,000 in this trade. If I get out of this trade, I only need to take one more trade that makes $2,000 and some change, and I will have hit my goal for the month and being on pace to make $50,000. What we psychologically do is we say, oh, it's only $2,000. Number one, that's so far from $50,000. And so we think we want to hit $50,000 in one trade, make a home run. Or we look at the $2,000 and we say, well, in order to be on pace to hit my goal, I got to hit 4,000. This is only 2,000. What am I going to do with that? But we're not thinking psychologically that small wins add up. $2,000 two times is $4,000. 4,000's 12 months. Doing that every month for 12 months is $48,000 a year. You're just right there knocking on your $50,000 a year goal. So we got to understand that small wins add up. And when you understand that, that small win becomes acceptable. Second thing is this, when we talk about the psychology of winning and why it's better than losing, is you get a dopamine hit every time you get a win. Every time you get a win, it's like a little hit that says, you got this. You understood. You looked at the chart. You placed a trade. You were right. There's so many positives that add up when you click that button, enter a trade, you put money at risk, that money comes back home. Not only does it come back home, it brings some green friends. That psychologically is like fuel. It's like gas in your gas tank. Well, guess what? The opposite happens when you lose, especially when you lose and you could have won. It almost has a 10x negative effect. Guess what it says? It says, I read the chart, but maybe I was wrong about it. I bought the right option, but maybe I didn't buy enough time. Then you start to go into, I had the money, I had profit, but I gave it back. Then you start to go into, I'm stupid, I'm greedy. Why would I do that? Now I got to tell my spouse or my friend I had money and I gave it back. What if this happens to me again on the next trade? Well, now I'm going into the next trade with less money. What if I lose this? Then if I lost 2,000, if I lose that on the next one, now I lost 4,000. I'm going backwards. It has a 10x negative effect taking a loss when you had a win versus taking a small win on your way to hitting your goals. Because that small win, it's like, whoo, I brought all my money back home. I got a little bit of profit. And you can start to see the growth. And that's what we need as human beings. We need to see growth. A lot of people quit this industry because they don't see the growth. They're like, man, I've been doing this for 6 months and I'm actually negative 5,000. And so you feel like now I wasted time and I lost money. Maybe you even invested in a course too. So you're like, I bought a course, I took some coaching, and I still lost money. But that's that negative effect, especially when you had money. That's why in the 5-Year Millionaire program, we tell people, we try to place one trade that makes a 10% profit. What happens is when you have $1,000 account and we're like, hey, it's up 10%, we up $100, get out. In your mind, you're like, what I'm gonna do with $100? That ain't gonna pay for nothing. But it's like, it ain't about what $100 will pay for. It's about you being a consistent winner. It's about small wins adding up. Because guess what? If I can help you do that 10 times, that's $1,000. Now you go into your next trade with a $2,000 account. And if we can continue doing that, now we go from making $100 to $200 a month. And guess what? If we can do that in a shorter amount of time, because you got double the money, you go into your next trades with $4,000 account. That's that small win adding up. All the while you're getting those dopamine hits. All the while, psychologically, you're like, I'm winning. I see the progress. I see my account growing. I can see what this could possibly be 2, 3, 4, 5 years from now. But if you're losing money, your vision starts to get choppy. You're like, I don't know if I believe that this can retire my family, my spouse, my significant other. I don't know if I believe this is the vehicle that can create generational wealth for me. Then you get distracted. Let me go do real estate. Let me go do Amazon FB shipping or whatever. You start to let me go in the network market. You start going off in all these other directions because your belief starts to get chopped down when you don't understand that psychologically winning is better than losing, even if it's a small amount, because those small wins add up. The third thing I want you to think about, and what really helped me, is understanding that I'm not necessarily here to make money. I'm just here to make sure I don't lose money. And if I don't lose money, then I will eventually make money. And that's putting on the hat of what I like to call a risk manager. And when you're a risk manager, you start to ask yourself questions like this. If I got a $5,000 account, $10,000 account, let's just say 5,000. Most people have anywhere from 3,000 to 5,000 to get started with. If I make $1,000 on my $5,000 account, as a risk manager, you might be like, well, $1,000 isn't going to change my life. However, as a risk manager, you start to say, well, now every time I put $5,000 out, I'm putting it at risk. But now as a risk manager, I would rather take this small win, take this $500 to $1,000 profit, say $1,000 profit. Now, when I go into my next trade, I go into it with $1,000 of the market's money. What does that mean? That means my next trade, I have $1,000 cushion. Meaning if I'm wrong and I lose $1,000, I'm back at break even. So that relieves a little bit of pressure when I go into my next trade, because I'm going into it with $1,000 of the market's money. Second thing is, if I go into a trade and I have $5,000 and I use the whole $5,000 on the next trade, maybe I see an option trade or something else that costs $500 to $1,000. I now have $1,000 of the market's money that I can do my second trade with, or I can do a more riskier trade with. So maybe you want to do some day trading, or you want to jump into a short-term 0 DTE, which is a 0 day to expiration, same day expiration option. You don't want to do that with your initial $5,000 and potentially lose it all. But you may say, hey, I have $1,000 profit from my last trade. Let me try something a little risky with the market's money to see if I can get a bigger return. Or let me, we teach people not to really hold over earnings, because earnings can make the stock shoot up or down if you're just trading. If you're investing over a long period of time, obviously you'll hold a company over earnings. But if you're trading, you don't want that one day event to shoot up or shoot down and kind of blow up your account. But if you have $1,000 of the market's money, you may say, hey, I am going to take a calculated risk on this stock. I've been doing research. I think they're going to beat earnings. Here's why I think the stock is going to move afterwards. It's easier to take that trade with the market's money, with somebody else's money. So as a risk manager, the more you take profits, the more you can manage your risk going into your next trade, meaning you got a little bit of a cushion, or the more you can take maybe a riskier trade, but it's not risky to you because you're using somebody else's money. So if it works out, great. Maybe that $1,000 turns into $3,000. But if that $1,000 goes to zero, you're like, okay, well, I took that risk with the money that I made from the market, and I still got my $5,000 over here in something more conservative, or a long-term trade, or a long-term investment. But you can only do that if, when you have some profit, you get comfortable taking it. Last thing I want to talk to you about is understanding that you are not perfect, and this is the wrong place to try and come and be perfect. And when you are in a trade and the trade is up and you take profit and the trade keeps going even though you got out, when you are not grateful for taking that profit, what you are literally saying is that I believe that I should be able to perfectly buy in at the bottom. And not only that, I should be able to perfectly get out. And when I get out, the stock is done going up. I should be able to perfectly pick the top, the last day, the last minute, the last hour that this stock is going up. I should be able to perfectly pick that, meaning once I sell, it's done going up. I am the stock market king. I am the option trading queen. And when I sell, everybody's done buying. That's exactly what you're saying. When you sell a stock or option, you take some profit and the stock goes up without you a little bit more. And you're like, oh, I'm pissed off. I'm upset. You're basically saying you think you're perfect. You think you're a stock trading king or queen. You think you are a god with a crystal ball and you can predict to the day, minute, second, hour that the stock is going to be done going up. And when I put it like that, doesn't it sound a little ridiculous? That you believe that once you sell, that's it. The stock should roll over and start going down. And once you think about it like that, you can start to give yourself some grace and say, you know what? No, I traded my plan. My plan was to make X amount on this stock, or my plan was to be in this stock until it hit this number. After this number, I said I was going to take profit. It doesn't matter what it does after that. Did you follow your plan? And I hope following your plan, I hope part of your plan, I should say, is not being perfect, because you are signing up for an impossible task, especially when it comes to the stock market. It is impossible to be perfect every trade. It's almost impossible to be perfect any trade, let alone every trade. You feel like I'm the king, I'm the queen, and when I sell, that's it. Stock's going to turn around. Don't even put yourself in that situation for a lifetime of disappointment, because that's what you're signing up for. It's pretty much being delusional. It's pretty much being delusional. So think about it. Small wins add up. Take the small wins and keep chipping away at debt. Keep chipping away at financial freedom. Keep chipping away at paying off your house, paying off your car. Keep chipping away at building and growing your account. Psychologically, keep depositing them wins into the bank account, because those small wins build your confidence. They build your account. They build muscle memory. Because if you keep picking up $1, $500, $1,000, over time, your account will grow. And remember, if you're profitable and you give that money back, I mean, that cut hurts 10 times more, because psychologically, you start thinking, I'm a loser. Why did I do that? Why was I thinking that? What if this happens again? So winning psychologically is better than losing, even if it's a small amount, even if it's in a practice account. People say, why should I practice trade? I don't feel like doing it because it's not real money. I'm like, it's not even about the money. You got to build a dopamine hit of track records of being right. If you keep practicing in your account, getting in, getting out, and you making money, what do you think that does for your confidence when you go to put real money in the account? You're like, I have done this 100 times in my practice account. I've seen this before. I've seen this 99 other times. Now I got real money. You're not scared. You're not like, how do I enter? How do I exit? What happens if the stock goes against me? You're like, I've seen this. I've done this. Let's go. So winning even in a fake virtual paper trading account is better than not practicing, not trading at all. Because if you can get used to it, you like, okay, now I'm ready for real money. I know what could potentially happen once I put cash to work. And then think about your trades as being a risk manager, ladies and gentlemen. You are not here to make money. And in the beginning, you're here to not lose money. Your real goal should be in the beginning to learn the game, learn the industry. And only through learning the game and the industry. And I don't just mean learning with knowledge, learning how to control your emotions, learning how to manage greed, learning how to manage fear. Those are all things that you have to learn. And only through learning and mastering those will you unlock the key to profitability. Let me know in the comments. Are you going to master fear and greed, or are you going to let it master you? I'll see you on the next episode. When we talk about the woo! Can we say it?